Aptos and SUI originally started as the same chain, the chain that was originally designed to be Facebook's stablecoin payments chain. In today's video, we're going to be diving into exactly what these chains are, where they are today, what they're offering, and in which sectors they're both excelling at. So, if that sounds good to you, we're going to put on our boxing gloves and we're going to fight Aptos versus SUI. Let's go. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Hey guys, I'm Alessandro. In today's show, we're talking Aptos and SUI. And so as I said, Aptos and SUI are both derived from the original Facebook stablecoin project that was initially designed to bring stablecoins in payments to Instagram, Facebook, and WhatsApp, and combine all of those applications together and have some kind of payments infrastructure that sat underneath all of them. That project was abandoned due to regulatory reasons, and when it was abandoned, it kind of split. A portion of the team went to work on SUI, another portion of the team went to work on Aptos. They both raised a decent chunk of money. SUI raised 350 mil, Aptos raised 300 mil. FTX were investors in both of these as well. Interestingly, when FTX collapsed, Aptos did not buy those tokens off FTX, but SUI did. Probably, obviously meant that those Aptos tokens were sold on the market. They were liquidated, whereas SUI's weren't. Interestingly as well, if FTX and Sam Bankman-Fried had managed to hold on to those SUI tokens, today they'd be worth about $4 billion. Not to say they would have held them until now, but yeah, kind of crazy. That plan would have worked if he wasn't caught along the way. Imagine that. SUI, Solana. He'd be one of the best VC investors of all time. Probably was anyway. Anyway, I digress. SUI v Aptos. Both these chains are built upon the same language as we said. This language is called Move. And Move offers a few distinct benefits over other chains. First of all, it's like super scalable. Obviously, it had to be. If it was going to be Facebook's blockchain, it needed to be able to handle hundreds of thousands of transactions per second. SUI can handle about 297, theoretically. Aptos can do about 160. Again, 1,000 that is, theoretically. Both chains have never really been tested in that capacity. But that's what they're capable of. The other thing that they have is this. They cannot go through this normal problem that happens, or this common issue that arises in blockchains, of a double spend attack. So a double spend attack is as simple as it sounds. It's where the same coins are spent twice, and it can obviously destroy entire chains if that attack was to go through. The way that the Move language is set up basically means that's not possible. So there's an extra layer of security built in to the Move language, and that was essential at the start because, again, this was meant to be, Facebook's stablecoin, right? This was the language that was built upon. They designed it to make it super scalable and super secure. So there's a few areas in Aptos and SUI. They've obviously departed and they've gone their own separate ways. They're both built upon Move, but fundamentally you've got SUI Move and Aptos Move. There are a few distinct differences. We're going to go through some of those differences in just a second, but what we're going to look at here really today is we're going to be looking at which chains, Aptos or SUI, is doing better in which sectors. And just from like a chain specific standpoint, you can pause the video here, but you can see in terms of like daily active addresses, SUI's in the lead. In terms of transactions, Aptos is cheaper. That's again by design. Aptos plan on basically being as cheap as possible, and SUI actually need to pay validators with SUI pay rewards from transaction fees or transaction fees to validators, so their transaction fees are a little bit higher, again, by design. Max theoretical TPS on SUI is actually 297, whereas on Aptos it's only 160. Now this is actually because SUI is object-based, Aptos is not. What that means is, if I have some tokens on SUI and I move them from one wallet to another wallet, it's not the wallets that are changing, it's the object that's changing. So the object was in wallet 1 and now it's in wallet 2. So that's just one transaction. Object in wallet 1, the next transaction says the object is in wallet 2, one transaction. Whereas on most other chains, and Aptos included, if you want to send something from A to B, you need to take it from one wallet, send it, and receive it on the other wallet. So that's actually 2 transactions, which means that realistically, Aptos and SUI are kind of equal in terms of their true TPS. It's just that Aptos does 2 transactions for a send and a receive for every one of SUI's transactions. So theoretically, that actually means that SUI can handle almost twice the throughput of Aptos, despite the fact that they're basically the same tech, because SUI has this object-based kind of mechanism. Now again, you can go through these, but Aptos is slightly faster in terms of its block time, slightly slower in its finality. But you can see it's kind of like it's to and fro, between the two. Now, if we look at their market cap, you can clearly see that SUI is far ahead in terms of its total TVL, in terms of its like FDV, in terms of its DEX volumes. 30-day DEX volumes are like close to double Aptos's. Now, interestingly, they both are actually position 8 and 9. If you look at 30-day DEX volumes across all chains, SUI and Aptos are here, right? 8 and 9. So that they are actually next to each other. It's just that the difference between 8 and 9 is quite stark. But you can see here, Aptos is ahead in stablecoins, real-world assets, on-chain Bitcoin, and actually it's ahead in market cap to TVL ratio, which can often give us like an insight into who is better value at given prices. So we're going to go into SUI, then we're going to get into Aptos, and we're just going to see who's better in different sectors, right? So another little chain comparison. Here's stablecoin comparison. You can see they've both been growing like simultaneously. Now, interestingly, Aptos is ahead of SUI in terms of total stablecoins on the chain. They're both at like all-time highs now. SUI is not at all-time highs in terms of its stablecoin volume right now, but Aptos is at all-time highs at 1.3 billion. SUI has a higher all-time high at 1.6. Daily active addresses across both chains, not the best metric, but it does tell you what, like, to some extent what's going on, because a lot of these things can be botted. But SUI had a peak of 2.5 million and is now down to sort of 1 million, whereas Aptos had a peak of about 1.5, 1.7, and is now about 650k, right? So SUI is ahead right now, but there's been a bit of to and fro here as well. But SUI is currently leading. Again, it's not a stark difference here. Daily transactions are almost a wash, really. SUI again has definitely got more area under the curve here and has been ahead for a while. But you can see this is the important thing about crypto generally. It's like, what's the trend? What's the change? What's the delta? Aptos has been closing this down, right? Daily transactions on Aptos have been increasing, whereas they haven't really been increasing on SUI, despite the fact that they're up month over month. But actually, if you look at the highs, they're nowhere near the highs they were back in April. This is where the difference is quite stark in stablecoin transfer volume. Transfers on SUI are much greater, which is even more interesting when you consider that actually they have less stablecoins on the chain. So that means the velocity is like even even more pronounced. The fees are kind of, for the most part, actually irrelevant, because as we said, Aptos' fees are 10x cheaper than SUI's, and that's by design, mainly because those fees are not given to validators. And here we can see that there's more developers, like core weekly commits, more developers on SUI. So generally we want to be going to where the developers are, because they're going to be the guys that are creating the applications that can bring value. And right now, SUI is the chain that has more developers. But Aptos is beginning to close that gap. If we look at core active developers, right now it's very close, right? SUI's got 83, Aptos has got 63. So the gap's getting kind of closer. Hard to say really if that's going to be like that. It's kind of been quite choppy, but SUI's had more developers building on it ever since launch, and Aptos has never really got close. So for sure, Aptos needs to bring some new developers onto the chain to really kind of like push SUI in that regard. And if we go back to this is SUI on DeFi Llama. So DeFi Llama, I think, this is actually a really great thing that you can do on DeFi Llama just generally. And I do this quite a lot, to be honest. I check out a chain's DEX volume. If it's increasing, what I then do is I overlay the TVL. If the TVL is consistently going up, then I overlay the token price. And what you tend to see is there's correlation, right? TVL goes up, token price goes up. TVL goes up, token price goes up. TVL goes up, token price goes up. And we've seen this correlation pretty bang on with SUI. Now, sometimes you don't quite get that perfect following from token price. There's a bit of a lag. When there's a bit of a lag, that can be something that provides opportunity. So, SUI fundamentals are leading, token price is actually following. And it's not a surprise. SUI have got an ETF with 21 shares. SUI have already got a Grayscale trust. SUI have got this ZK login, which allows for like seamless onboarding of Web 2 developers into Web 3. You can log in, create a wallet via a Google account, and the wallet is completely abstracted away, tied to your email address. Like, very, very useful for onboarding Web 2 users into Web 3 protocols. SUI's bringing Bitcoin on-chain. So there's a BTC fight on SUI. They've currently got like 500 or so Bitcoin on SUI. So they're bridging the gap to DeFi as well. SUIPlay, massive development also. SUIPlay, this play console, if the rumors are true, is going to be more performant than the Nintendo Switch 2 when it comes out. I think actually buying the SUIPlay back when it was available would have been a very, very good play. Obviously, you get the games console, but I think very likely this thing comes with a bunch of airdrops and probably good ROI on that, to be honest. From the gaming perspective, Myston Labs, who are behind SUI, they actually acquired Parasol, and Parasol are a gaming firm. They do a bunch of different games, they've got a bunch of different partnerships, but fundamentally, obviously they're now owned by SUI, so these games are all going to be built on SUI. And Parasol also have a collaboration with Pokemon. There was this thing that happened back in April. People realized that Pokemon Homes, in Pokemon's Homes documentation, there was a link from Parasol in there, sort of like, look down here, Parasol can access your information. Again, Parasol owned by Myston Labs, which is essentially SUI, sparking rumors that Pokemon Home would exist on SUI rails to some extent. Some of the assets might be stored on the SUI network, on the SUI chain. SUI as well has this like unique integration of Deepbook, which is liquidity that is like tied into the chain, and Walrus as well, which is storage, a storage application much like Dropbox in like Web 2 or like Filecoin or Arweave in Web 3. And what Walrus is it's data storage built into the chain. And so it's like completely seamless. It's not just an application, it's actually built into the tech, the SUI tech stack. So like really amazing development, really interesting stuff going on with SUI. So it's no wonder really that the token price is following all of these amazing fundamentals. Now, also SUI have got this connection with Google Cloud, building infrastructure for like security and scalability for developer tools. Again, very, very interesting. And so what you can see with SUI, right, is they're going after the end user. Their primary audience are gamers, retail users. They're making the UX perfect, super seamless. Web 2 app developers. They're trying, if you think about the integrations, the ZK login, like SUIPlay, Pokemon and Parasol, Google Cloud Infrastructure, these things are all going after the end user. They're trying to bring users onto the chain. This is actually in contrast. Yes, they've got the 21 shares ETF, which is for short institutional, but this is in contrast to Aptos. And actually, if we just compare SUI to Aptos in this regard, SUI just absolutely wipes the floor with them. But Aptos are going after a different kind of market. Now, Aptos are actually sponsoring this show, and I want to be as impartial as I possibly can be and provide the data on Aptos as well. SUI are far ahead in terms of, in my opinion, in terms of gaining the end user. But in terms of gaining the institutional user, Aptos and providing payment rails and infrastructure, Aptos arguably are ahead, right? And if we go back to this area here, in green down here, we can see stablecoin market cap, RWA market cap, and on-chain BTC are all, and market cap to TVL ratio, are all higher from Aptos's perspective. Okay, so in 2030, this is a report by Redstone, the assumption is that there's going to be $16 trillion in AUM on-chain, which is an enormous amount, right? You can argue this is true or false, but if you are of the opinion that that tokenization is happening, tokenization is coming on-chain, then it is for sure going to happen that on-chain RWAs become, the market cap of that, the AUM of that, becomes extremely large. Probably larger than all of crypto. I mean, that isn't a surprise. It should come as no surprise that the rest of the world's assets should be worth more than just the crypto assets, despite the fact that crypto assets are the ones that currently exist on chain. And so if we take this figure, right, 16 trillion, and just store it a second, and we look at RWA.xyz, brilliant place for checking anything RWA related. Etherlite's got $7.7 billion in RWAs, right? But if we look here, ZK Sync's got 2.3 billion, which is enormous as well. But Solana's at 567, and Aptos is fourth, which is very impressive at 532. So Aptos are fourth in RWAs on-chain, actually in line with Solana, when you consider that Solana's market cap is obviously enormously greater. That is proportionally a much greater chunk on Aptos than Solana. And if we open up Aptos's RWAs here, we can see that it's been gradually trending up and to the right. And what most of these RWAs are tied in is private credit. This Pact company issue private credit on-chain. I can show you this if you want, just here quickly. All it is it's kind of interesting to be honest, but they originate loans. The loans are KYC'd and verified. They're verified off-chain, but they're redeemable on-chain. And these are all loans that are paid back in dollars on Aptos. It's just kind of interesting, really, at given intervals. So if you want to know exactly what those exact RWAs, those instruments are, then you can check out here. It's emerging markets, institutional liquidity, etc. Right? But you've got these crazy long names, but they're just a mortgage portfolio on chain. I mean, when I was reading through this, I was just like, this is kind of crazy. But it's definitely the start of real tokenization of private credit, not just stablecoins that are coming on chain, right? And Aptos has got a decent chunk of that. They've also got $1.34 billion in stablecoins. And if we just have a look at their stablecoin market cap, obviously it's all-time highs right now. Has been trending up aggressively, especially since the start of the year. I think it's almost 5x since in the last year or so. Currently sitting at $1.3 trillion, $1 billion, sorry, with $1 billion worth of USDT on chain. And so you've got stablecoin growth happening. Again, if you can compare RWAs and stablecoins to SUI, Aptos is ahead despite the fact that it's much lower down in market cap. So relative to its market cap, it's actually doing very, very well in terms of pulling new liquidity, new RWAs, because stablecoins are essentially an RWA on chain. So this is just saying Aptos enters the top three, now with 540 million in tokenized assets on chain. And Aptos are kind of focusing on this institutional kind of element of bringing liquidity on chain. We spoke about SUI's Bitcoin on chain. Aptos has also brought a lot of Bitcoin on chain. SUI has about 500 BTC. Aptos is currently at 2,400, well, call it 2,500 or so. So they're leading in that kind of BTC-Fi era element as well. So they also have this relationship with Yellow Card to bring instant zero fee stablecoin transactions across Africa. Signed up with 20 countries. These are sponsored payments, right? So the actual user doesn't need to pay for the transaction. These transactions are sponsored by Yellow Card and Aptos to generate usage. And that's what you're actually seeing right now. You're seeing lots of investment from Aptos Labs, the foundation, into this kind of payment infrastructure to really try and bring these payments on chain. If you think about what they're trying to go after here, it's like Aptos are going after Tron, right? They're trying to capture a bunch of that stablecoin related revenue that Tron make, whereas SUI are almost going after Solana. They're trying to be the next Solana, if you will. And which they're doing a very good job of it as well, might I add. So again, here we've got Aptos Foundation commits to 200 mil grants to expand DeFi. And when you think about what we said over here, developers are the most important thing, right? If you can attract more new core developers into your ecosystem, that is a massive win, and that is actually vital to progressing the ecosystem forward. So they've got $200 million in grants to bring new developers into their ecosystem. As new developers come into the ecosystem, that's going to generate new capital markets, new applications, new users to use those applications, which obviously generates revenue and value for the chain at large. And so if we go back to here and we compare the two together, we've got, the way I kind of see it is like SUI has gone after the end user, right? Gamers, retail users, Web2 users, whereas Aptos is going sort of like more TradFi heavyweights, asset managers, payment networks, large fintechs. Partnerships with BlackRock, Visa, MasterCard, Yellow Card, which is that remittance payments in Africa. They both got ties to Google Cloud Infrastructure. Very, very similar in terms of their tech stack for the most part. Really at the granular level, it's very, very high throughput, enormously scalable, and they have slightly different sort of like tooling, but really Aptos are on that sort of like enterprise grade compliant tooling, sort of that's their main focus. So we have gone for a focus on building things into the tech stack to make it like a seamless place for developers to come and build really, really cool stuff on, like DeepBook, like WALRUS, like sponsored transactions, all that sort of thing. Again, SUI is really focusing on gaming. They've got that real edge for gaming, especially with SUIPlay, which scales like SocialFi, NFTs, institutional DeFi. They're focusing on that later. They're focusing on the end user first, whereas, as I said, Aptos are really focusing on like tokenizing real world assets, regulated stablecoins. That's their focus first. And Aptos has been doing that for a very, very long time, arguably before like RWAs were cool. And so it'll be interesting to see if the RWA sort of like narrative can catch on for Aptos. We've clearly seen that like the UX on SUI has already caught on, and that's already flying, right? We saw back here, was it here? This was effective on SUI, right? TVL gone up, token price has gone up, DEX volume's gone up. It's all sort of fundamentals of following price action. And if we have a look at the same thing, but for Aptos now, we've got TVL up and to the right. If we lay over that DEX volume 2, we can see DEX volume up and to the right. And then if we overlay that with Aptos, then actually we've got a disconnect here. Now, the disconnect here definitely can be as a result of tokenomics, because if tokenomics are not perfect, then it's going to be really, really hard for token price to go up. And in the case of Aptos, this is actually one of the reasons I think why token price has underperformed relative to SUI since its inception. Aptos has 7% staking yield, which means that every year they've got 7%. It decreases every year, so it gets less and less and less. But you can earn staking yield on locked tokens. So if you're a VC, you've got a bunch of APT, you can lock that APT, but you can earn staking yield on that APT, right? Which means that if you're locked, you're still earning staking yields, and then you can sell that APT basically like early, right? Because you're otherwise locked. So I think that is a portion of why APT price just hasn't really followed in SUI's footsteps. But more than anything, probably it's from a marketing perspective. SUI, as I said, have really gone after the end user. They focused on marketing to those individuals more than anything. Whereas Aptos have gone through these institutional rails, and TBC really which one ends up in the future being the strategy that ends up working. Right now, SUI are ahead. That does leave room for Aptos to do something, right? And here we've got fundamentals, and token prices are basically flat. So those things I always find quite interesting. Anyway, that is at a very broad level kind of Aptos versus SUI in terms of what they are doing right now, a little bit about their tech stack, and a little bit about what I think about both protocols. Going deep into both of these was actually really, really cool, to be honest. I'm really bullish on the entire kind of like move language after going deep into it. And it's kind of made me like rethink about my longer term strategy. Not really about my next sort of 3 to 6 months that I'm planning on doing with what I'm planning on doing now anyway, but definitely about how I'm sort of planning for the actual next generation of blockchains when they are required. As we saw at the start, both these chains are nowhere near max capacity. They're doing maybe a few hundred transactions a second. At the absolute most, they're doing like 10 to 20K. They can handle 10, 20x that, right? So we're yet to see what applications can be built that truly push these chains to their limits. And for me anyway, I'm quite excited to see what applications can be built that truly push these chains. And when these chains are pushed, what's that going to look like? So hopefully, well, if you got any value out of that, please leave a comment. Let me know what you thought. Otherwise, if you've got any tokens you want me to check out in SUI or Aptos, or just generally any tokens, I'm going to do some deep dives into some different tokens in especially the SUI ecosystem, because it's definitely popping off right now, and I think there's some big opportunities there over the next few months. So if you've got any favorites, by all means drop them below. There was actually one gem in this video. You can go back and try and find it. It was in one of the documents. Very, very undervalued gem, but it's quite small, so I'm not going to go into too much detail on it. Otherwise, thank you so much for watching. I hope you have an excellent day, and I shall see you in the next one.